Aotearoa, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. China's economic activity over their holiday period will be impressing investors, while the US worries about weakening labour markets. But first, the ongoing US federal government shutdown means there is no USDA World Agricultural Supply and Demand Estimates report for September that was due today. That will delay scrutiny of farmageddon, especially for soybean farmers. Bailouts are on the way in a way Trump hates in other countries, but they won't be large enough to hold off existential issues from many farmers. But despite the shutdown, there was a long-dated bond auction overnight for their 30-year Treasury bond, and it had attracted normal levels of support. It resulted in a median yield of 4.67%, up from 4.58% at the prior equivalent event a month ago. Across the Pacific, Japanese machine tool orders for September rose almost 10% from a year earlier to be its best September level since the record high in 2022. Driving the increase was export orders, although domestic orders gained too. It is an impressive result for them. And Taiwanese exports in September continue to astound. They surged almost 34% from a year ago to more than $54 billion in the month, their third highest month ever. Only the prior July and August were larger, so they're on a real roll. This latest data was driven by strong demand for their electronics products, up more than 86% on the same basis. Other machinery orders were good too. You can see why mainland politicians covet their neighbour and want to claim it. In the Philippines, their central bank cut its policy rate unexpectedly by 25 basis points to 4.75%. And China is back from holiday. According to official reports, they estimate the Golden Week holiday generated 888 million separate travel trips, with total overall spending at 809 billion yuan. These are record highs, with hospitality up 2.7% and tourist spending up 6%. Their overall GST data shows retail activity up 4.5% from year-ago levels for this holiday period. By any measure, these are good levels and indicate China's economy is more than holding its own at present. It also indicates that domestic demand can be a sustainable driver for them, much as Beijing has wanted. Supporting this conclusion has been the positive financial market reactions post-holiday from the equity, bond and currency markets. And Indonesia reported August retail sales overnight, and they expanded at a good pace, up 3.5% from a year ago. And while it wasn't as fast as for July, it does indicate that recent government measures to dig them out of a languid period are working. This is important because social unrest spilled onto the streets a few months ago. In Europe, Germany reported August export levels overnight, and they came in at almost the same as they reported a year ago, €130 billion. In Australia, their October survey of inflation expectations again shows pressure at the top of the recent range. Those expectations edged up to 4.8% from 4.7% in September, continuing high results since June. This is building concerns that third quarter inflation may exceed the forecast of 3% when it is released on Wednesday, October the 29th. This latest uptick reflects the impact of unwinding temporary energy subsidies and elevated labour costs driven by weak productivity. Global container freight rates were little changed last week, down just 1% from the prior week to be under half year-ago levels. Bulk freight rates were also unchanged for the week to be 5% higher than year-ago levels. The US Treasury 10-year yield is now at 4.15%, up 1 basis point from yesterday at this time. And the price of gold will start today at $3,980 an ounce, down $73 from yesterday and now well off its high. Volatility is settling in. Silver is down too, but not by as much, at just under $49 an ounce. Earlier in the day yesterday, it had a new all-time high before the pullback. American oil prices are down $1 at just on $61.50 a barrel, while the international Brent price is now just over $65.50 a barrel. And the Kiwi dollar is now just on 57.4 US cents, down another 40 basis points from yesterday. Against the Aussie, we softened 10 basis points at 87.7 Australian cents. Against euro, we're down 10 basis points at 49.7 euro cents. That all means our trade-weighted index starts today at just on 65.2 and down 20 basis points from yesterday. And the Bitcoin price starts today at $120,690 and down 2% from yesterday. Volatility over the past 24 hours has been modest, just on plus or minus 1.4%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.